What's up, guys? This is Manoj Gopani. I welcome you all on behalf of the Edupedia world. It's a wonderful day outside, and I'm sure that you guys are enjoying your day to the fullest. Happy Republic Day to each one of you. I'm sure that you guys are witnessing some great moments in your life currently. Today, with this presentation onwards, we are going to discuss about the relevant topics relating to dividend decisions. What all companies are willing to favor with the kind of policy implementation relating to dividend, what are the benefits which are involved in paying off the dividends, what are the obligations for the company, what are the factors which affect for any of the company while paying the dividends, and what all are those different models with which we can calculate the pricing of any kind of a company's valuation shares, how much amount of dividend a company should pay, and what all are the factors which are going to affect the pricing of any of the company's share with respect to the payment of dividends. We will be covering all these topics one after the other while going forward towards other respective presentations. This is the first presentation. I'll be marking the inception for this with a perfect kind of a note just to remind you that you guys did promise me one thing of regular and recurring revisions, and I'm sure that you won't make us feel any bad about that thing. So do remember, guys, do revise the topics time and again. That is going to help you up in your CA final preparations well on time. Perfect. With that kind of hope and belief in you, with that kind of confidence in you guys, let's mark the beginning of this wonderful chapter with a story. So let's hear some good story in order to make you understand this concept in a well presentable manner. So guys, this is the story with two of the best friends, Ram and Lakhan. So Ram is proper kind of boy who hasn't studied much during his schooling career, and Lakhan is the one who has studied very well during his schooling academic career. He has focused upon each and everything with respect to his studies, academics, sports, and every other extra co-curricular activities that he can get involved in. So after completing the schooling, Ram set on a kirana store, the general store of his dad, whereas Lakhan went and studied further chartered accountancy. So he started studying chartered accountancy, level CPD, then IPCC, and finally he cracked final as well one day. So he became a chartered accountant. So now Lakhan has started providing consultancy and advisory services to its clients on different related matters. Whereas even today, Ram is still sitting in his particular kirana store, that is the general store, where he started after the schooling career. Just after completing the chartered accountancy, one fine day, Ram and Lakhan met each other. Ram told Lakhan that he is still working in the same shop, wherein he is just investing his own money. However, he is not able to get the profitable results out of it. Why? Because he is short of some of the capital. And certainly, he is just investing his own money, so that is the probably only reason as to why he is not getting rich for that particular thing. So now here comes Lakhan, who is having a very articulate kind of a mind. He inculcates deep vision into the kind of thinking what Ram delivers to him. So he suggests him a basic idea, and that was to stop doing his business into a proprietorship firm or a company. Rather, he should shift his business to a public limited company. And now he provided him the idea of investment through public limited company. He delivered him the kind of ideas relating to how he can establish a very good business by incorporating a company rather than working in a proprietorship business. So herein, Ram accepted the idea. He started his own public company. Why? Because he had certain amount of capital funds to start out it. So initially he started this company on his own, and then he started accepting deposits from public. He invited many of the applications relating to all the debt facilities. He invited debenture holders. He invited all those creditors. He invited all other stakeholders who can build upon that company. But you know why? You know what? Basically, he is basically respecting one person who is taking the maximum risk for him, and that is who? That is the shareholder of the company. So guys, Each and every stakeholder is important in a company, whether it's creditors, whether it's debenture holders, whether it's other financial institutions, banks. But having said that, a shareholder is the person who is the most important one to any of the company. Why? Because he is the person who is taking up all the entire risk for that particular company. So here's that story. The most important person for any of the company is this man. He is the shareholder. He is the one who has invested into that kind of company. He is the one who has actually provided Ram the requisite amount of funds with which he can run his company in a well appropriate manner. So shareholder is that person. So what do Ram has to do in order to ensure that this person, shareholder, remains happy all during his life? He just needs to take care of a few things. And one of the most important thing for that is dividend. So dividend is a thing which is going to be an essential part for shareholders' happiness. Why? Because shareholders are basically concerned with two of the things. One, the dividend. Second, the growth. So apart from these two things, shareholders are not basically much concerned about any other thing. If a shareholder is getting good amount of dividend, and two, if it's getting the good amount of growth in any of the company, he or she will remain happy with that fact. So dividend is a very important thing in order to make this man happy. That is the shareholder. So now you'll be thinking about what does this dividend actually means? What does dividend actually mean? So guys, dividend refers to that portion of the profit after tax which is distributed amongst the shareholders of the firm. A company earns revenues. A company incur many of the expenses all during the entire financial year. After subtracting all those expenses from the revenues, the company finally gets the profit, which is before taxes. After the same, the company is required to pay off its creditors, its debt holders, its preference shareholders, before ensuring that the remaining rest assured amount is distributed amongst the shareholders of the firm. So company has to go, the entire cycle has to go that way. So first of all, the preference is given to all those persons who have given the particular debt to the company. So debt holders will be creditors, debentures holders, bond holders. These are the persons who will be considered into creditors position. After providing them the requisite amount, the amount is being paid as preference dividend to the preference shareholders. And finally, the remaining portion, which is the earnings which are available to the shareholders, out of the same and keeping a bit of retained earnings, looking into the future purposes and future vision of the company, its growth plans, the remaining amount is being distributed as dividend amongst the shareholders of the firm. So this is basically dividend. Dividend refers to that portion of the profit after tax which is distributed amongst the shareholders of the firm. So guys, this was an initial kind of a story to make you understand what is a shareholder and how his life is basically linked towards dividend. So that was all about Ram and Lakhan's story. So guys, I hope that it is clear to you what is basically dividend, and certainly who is the most important person for any of the company for which actually the company is working for, and that is none other than this man, which is called the shareholder. Now, do you know one thing? What? Who was the first company, or I should say, what was the first company, what was the name of that first company to issue the stock and introduce the concept of paying dividends in this particular world in which we are actually living? So there is always the first person who actually thinks about making change in this particular world. There must be someone who has introduced aeroplane. So that was two brothers who actually founded out that. So there must be some of the person who have invented like telephone someday. So Graham Bell was the one who invented telephone. There must be a person who has invented television someday. So John Louis Baird was the person of that. So there must be a person or a company which was first introduced the concept of involving the issue of stock and introduced the concept of paying dividends. Absolutely yes, there has to be, and that was none other than Dutch East India Company. This company was incorporated in 1602 AD. So this was the first company who undertook the world's first initial public offer IPO, and therefore became the first public company to issue the stock. It actually played an integral kind of a role in modern history's first market crash as well. So from 1602 to late 1700s, this company paid a regular kind of a dividend, which yielded from 12% to 65%. And this company actually boasted of its success, wherein this Dutch East India Company enjoyed the success about 40 warships, 150 trading vessels, 1000 professional soldiers. And by the time each and every person of us knows that there came a time wherein the competition amongst many of the fields eroded all the monopolies, and such was the fate of this Dutch East India Company. So, just about completing the 200th year of it, the company destitute and was dissolved in 1800. This was the first company to issue the stock and the first company to introduce the concept of paying dividend to its shareholder. So that's how nowadays we'll be studying about dividend decision, what all is being involved in getting the best of the dividend decisions. But this was the first company, so I wanted to let you know that you must know about this idea, okay, that this is the company which involved and started and introduced this concept. So, hail, I won't say long live Dutch East India Company, it has already dissolved, but hail Dutch East India Company. Perfect guys, let's move to our major concept, and that will be introduction. So guys, dividend decisions, it's a very important aspect for any of the corporate's financial policy, since they can have an effect on the availability as well as on the cost of capital. So dividend decision is a very important aspect for any of the corporate financial policy. It is a decision which is being made by the board of directors of the company, and the finally approval of shareholders at the general meeting is given. Shareholders do not have, absolutely, they do not have any of the right to ask for dividend, neither they can ask for increase of the rate, as shareholders do not have the right to ask about these of the things. Only the board has got an unfettered right over here. However, having said that, this power cannot be used arbitrarily or advantageously by the board, and therefore the board has to evolve a dividend kind of a policy that can be advantageously maximizedly used for the maximum shareholders' wealth. And since dividend decision basically relates to the amount and timing of any of the cash payments made to company stakeholders, the dividend decision is a very important one of the firm, as it may influence the capital structure and stock price as well. And in addition, the dividend decision may determine the amount of taxation that a shareholder has to pay. So, in any sense, dividend decision is a very important aspect for any of the corporate social financial responsibility policy. So, dividend decision is made by the board of directors, and finally the same is being approved by the shareholders of a company. Dividend decisions influence the capital structure and stock price. And finally, dividend decisions enables the determination of the amount of taxation that shareholders have to pay. So guys, that was the introduction relating to dividend decisions. Though that's a thing which is not going to happen to be appear in your examination anytime soon. Nowhere in the recent times. But perfectly that has to be done in order to make you understand what is dividend decision first of all. That story was necessary. So perfect. Now this is a diagram. This is a chart basically. So a company basically earns profits. Okay. Out of the same, it retains some portion of that profits and finally distributes the remaining as a dividend. That's a very normal kind of phenomenon which is being done by any of the company. If a company wants to grow in its respective business cycle, it has to retain some of the portion of its profits. Why? Because retained earnings form a very important part for any of the capital structure. Why? Again, because it doesn't involve any of the flotation cost. The company doesn't need to bear any of the flotation cost while introducing any of the future issue of the capital, or I should say by keeping it in its capital structure. So that's why if a company is a growth company, it seeks growth in its near future, it has to retain some of its portion of profits and distribute the remaining as dividend, depending upon the needs of the shareholder and other requisite circumstances. Now, what all are those other respectable circumstances? Let's understand that. So that are the factors which affect any of the dividend policy. Number one comes in as the long-term financing decisions. So guys, whenever a dividend decision is treated as a financing decision, net earnings are viewed as a very good source of long-term financing. When a firm does not have the profitable investment opportunities, dividend will be paid, obviously. But if the firm grows at a faster rate when it accepts the highly profitable opportunities, external equity is raised to finance the investments. But retained earnings are preferable. Why? Because they do not involve any of the flotation cost. Payment of cash dividend reduces the amount of funds necessary to finance the profitable investment opportunities, thereby restricting it to find the other avenues of finance. And thus, the earnings may be retained as a part of long-term financing decision, while the dividends paid are distribution of those earnings that cannot be profitably reinvested. And that's why, while keeping this long-term financing decision into the mind, the company hits about taking care of the dividend policy. What should be the necessary amount of dividend should be paid, while keeping the long-term financing decision in mind. That has to be taken care of by the board of directors of the company, because they are the persons who are actually taking care of the management of this particular company. So this is a primary factor which is going to affect any of the dividend policy. Next factor, the important one, is wealth maximization decision. So guys, it's a very well-known proven kind of fact that because of the market imperfections which are involved in stock market and uncertainty, shareholders do give higher value to near dividends than future dividends and capital gains. That is a pretty obvious thing. You have something pretty much near to you, you'll just go and grab it rather than waiting for something which is far away from you. That's a normal kind of phenomenon and normal human tendency that also goes along with stock market as well. So shareholders give higher value to the near dividends, the one which is just about to appear in front of them, rather than the future dividends and capital gains. Payment of dividend influences the market prices of the share. Higher dividends increase the value of the shares and lower dividends decrease it. A proper balance has to be struck because between the two approaches, when the firm increases its retained earnings, the shareholders' dividends decrease and consequently the market price is affected. Use of retained earnings to finance the profitable investments increases the future earnings per share. While on the other hand, if we talk about the increase in dividends may cause the firm to forego the investment opportunities for lack of funds and thereby decrease the future earnings per share. And thus, the management should develop a dividend policy which divides the net earnings into dividends and retained earnings in an optimum way so as to achieve the objective of wealth maximization for shareholders. Such policy will be influenced by investment opportunities available to the firm and value of the dividends as against capital gains to shareholders. It has to be taken care of well in a very great manner, guys, that the company has to make a very optimum kind of a decision how much to retain and how much to pay dividend as dividend. Why? Because that is going to affect the financial position of that company via its wealth maximization. So it has to be taken care of well in that case. So that's the second most important factor which is going to affect any of the dividend policy. Next comes in the taxation structure. So presently what's happening in India, in our nation, the current regime, taxation regime is that wherein the shareholders, domestic shareholders, the people who have actually invested into the company are not supposed to pay the taxation on the dividends. So it is the company which is paying the dividends has to bear the amount of taxation on it. Presently, that's going on in India. So we are not supposed or worried about the same thing. Now, what comes in picture as if the company has got like good amount of earnings and if it's willing to spend it out on dividend, it has to take care of one fact, whether the same is going to affect the future decisions of the company or not. If the company can retain that particular amount in as retained earnings rather than providing distribution as dividends, it's always recommended for that company to retain the same amount for the growth purposes. Why? Because that is going to provide for the sole objective of wealth maximization of shareholders in a long run. So taxation structure has to be very carefully examined while going for any of the dividend policy. Next comes in the financial needs of a company. So guys, it's always predominantly involved this particular thing in as financial needs. So obviously if a company is running its business, it has some of its financial needs going on all the time. So if in case you have just supported one kind of financial need for a company, certainly the next financial need is going to evolve by the time you solve one. So it's a recurring kind of a process which goes on, financial needs for a company. So retained earnings can be a very good source of the income for creating the profitable investment opportunities, where internal rate of return of the company is greater than the return required by shareholders. It would be advantageous for the shareholders to reinvest their earnings rather than getting it as dividend. Risk and financial obligations increase if in case the company raises debt, because through the issue of new share capital, wherein the flotation cost will be also involved, and obviously that is going to hamper the position of the wealth maximization perspective. The mature companies, the ones who have hit it their extreme midway, the amount of years they have spent in the company, it's been good for a while. So mature companies having a few investment opportunities will show high payout ratios. The share prices of such companies are sensitive to dividend charges as well. So a small portion of the earnings are kept to meet the emergent and occasional financial needs. Growth companies, on the other hand, have very low payout ratios. They are in need of immense funds to finance their fast growing fixed assets. Obviously, they'll require. Why? Because they are in the growth phase currently. So distribution of earnings reduces the funds for the company. They retain all the earnings and declare bonus shares to offset the dividend requirements of the shareholders. These companies increase the amount of dividends gradually as the profitable investment opportunity starts falling into their respective places. So if you are a mature kind of company, you can think of providing maximum amount of dividends. But if you are in a growth phase company, you are still in a growth phase company, you are kind of a startup. So you'll have to ensure that you retain maximum amount of funds for yourself. Why? Because you are in the growth phase and you require them for the best of your use. So perfect. That is the financial need of the company. Next comes in the constraints in paying of the dividends. So guys, obviously there will be some of the constraints on paying of the dividends. And these constraints are just not legal. So yes, companies that do provide you some kind of legal restrictions on payment of dividends. Apart from that, there are some of the liquidity issues which can be going on the company. There is an access to the capital markets. There are some of the investment opportunities that bear any kind of constraint for any of the company for paying of the dividends. So all these things have to be taken care of. Liquidity is a very important, essential kind of a constraint for any of the company in paying of the dividend. Payment of dividend means outflow of cash. So ability to pay the dividend depends on the cash and the liquidity position of the company. A mature company may not have any of the restriction or constraint in that. It doesn't have much investment opportunities, nor many of the funds are tied up in permanent working capital structure. So therefore, they have a very sound kind of cash position and they can simply pay it off. Whereas in case of growth oriented company, in spite of very good profits, it will need certainly some amount of good funds for expanding the activities and the permanent working capital, and therefore it might be not in a very good position to declare the dividends. Cash position is basically going to determine all those things. Second thing, which is a major constraint for any other company, is the access to the capital market. So while paying the large dividend, cash position is basically affected. If new shares are being issued to raise the funds for the financing investment programs, and if in case the existing shareholders cannot buy any additional shares, the control is basically diluted, and this is going to hamper the position of the company in terms of its wealth maximization. Payment of dividends may be withheld and earnings are utilized financing the firm's investment opportunities, thereby not affecting the cash position. Next would be its investment opportunities. If in case the investment opportunities are inadequate, it is always better to pay the dividends, obviously, and raise external funds whenever and wherever necessary for those opportunities. But if in case the investment opportunities are adequate, it's always better not to pay the dividends but to retain the amount so that you don't have to resort to other capital structure options. Next comes in as desire of shareholders. So guys, it's all these things which we are studying, it's all because of the desire of shareholders only. Shareholders are the persons who are actually going to determine each and everything for the company. So shareholders basically form in majority two different categories. One category is the one who actually prefers to have dividends. They are not basically more bothered about the growth phase of any of the company. Next comes the second category of the shareholders that is majorly concerned about the growth and not dividend. So if in case there is a very small kind of a shareholder which has invested some amount in order to ensure that regular dividend income comes to it, and they do not form part of the dominant group or retired people, old people who have actually invested their savings, pension to purchase the shares. They are the ones who actually prefer the regular kind of income. Why? Because that is not going to affect their own personal liquidity in any of the cases. And hence, they select the shares of the company which actually pay the regular and the liberal kind of dividend all the time. Whereas, there are some of the investors like you and me who are still young, who can bear the requisite amount of risk in their life. So, as compared to those shareholders who prefer the regular kind of dividend as a source of income, there are shareholders who prefer to get the gain on the sale of the shares at times when shares command a higher price in the market. And for such of those people who actually prefer the gain on sale of the shares, there is a basic provision which is going on in our income tax structure as well, which is the basic STT. They have to pay the short-term taxation at the rate of 15% as per the current governing Indian taxation regime structure, and there is some amount of securities transaction tax which is likely to be paid at a very nominal amount of 2%. So that's the thing which is going to affect. So desire of the shareholder is a very important aspect as far as the factors affecting the dividend policies is being concerned. So dividend policy thus pursued by the company should be the one which is going to strike a very good balance between the desires of the shareholders who may belong to either of the group. So the dividend policy once established should be continued as long as possible without interfering with the needs of the company to create a particular kind of a good clientele effect in the market. So guys, these are the basic structures which is going to affect any of the dividend policy. The last one will come in as the stability of dividends. By stability of dividend, I simply mean that regular payment of dividend annually has to be made, even if the amount of dividend may fluctuate from year to year, may not be related to any of the earnings. So there are a few of the methods which involve in stability of dividend. One such is constant dividend per share. So in constant dividend per share, the company shareholders are not bothered about the earnings of the company. Supposedly, if the share face value is rupees 10, the shareholders have demanded for a constant dividend per share of 2 rupees each year, irrespective of the fact what the company is going to earn during that year or not. They are not bothered about it. They just simply want, okay, provide us a requisite amount of 2 rupees per share dividend every year on the face value of 10 rupees share. So they are not bothered about the earnings, whether the company is earning in lakhs or crores or maybe millions or billions. So they are just supposedly be bothered about that particular kind of constant dividend per share. So that is one kind of stability of the dividends policy with one particular category. Next will come in as constant percentage of net earnings. If a company is earning rupees, let's say 1000, the company shareholder has asked to provide you to distribute the earnings as dividend for 2% each and every year. Okay. So the first year, if 2% is being applied on 1000, that will come in as 20 rupees. So if the same company is going to earn, let's say 2000 rupees next year, then it has to be 2% on 2000 rather than keeping it as a very same level of 20 rupees. It will become 40 now, because now the company shareholder has opted for constant percentage of net earnings rather than constant dividend per share. So these are the two major measures which are going to affect any of the stability of the dividends, for the factors which is going to further affect the dividend policy of any of the company. So these are primarily 7 of the factors: long-term financing decision, wealth maximization decision, taxation structure, financial needs of the company, constraints on paying of the dividends, desire of the shareholders, and finally the stability of dividends. So guys, I hope you got the entire clarity as to what are the factors relating to affecting the dividend policy. Let's move to our last topic for this presentation, and that will be the forms of dividend. So guys, in any of the company, there are majorly 2 of the forms of dividend. One is cash dividend, another one is stock dividend. In cash dividend, the company basically provides you the cash or directly deposits the money into your bank account. So via that kind of check, which is usually given. So cash or bank is the same kind of dividend. Whereas in stock dividend, the company doesn't provide you any of the cash. It basically provides you another stock with the ones you are actually holding. So if I'll say, if I have 10%, I have provided 10% of the earnings as distribution for dividend. In stock dividend, if you are holding 100 share of the company, 10% more will include in your 100 share, and that will amount to finally the 110 shares rather than the 100 which you earlier had in your hand. So that is basically the stock dividend. Whereas in case of cash dividend, this particular amount, whether in terms of percentage of valuation of face value, 2% of face value, or somewhat on 2% of earnings. So that is the kind of thing which is going for cash dividend. If a company opts to go for the cash dividend, the company should have the sufficient amount of cash in its bank account when the cash dividends are declared. If in case it doesn't have enough amount of bank balance, it should borrow the funds. So for stable kind of dividend policy, a cash budget may be prepared for coming period to indicate the necessary funds to meet the regular dividend payments. The cash account and the reserve account of the company will be reduced when cash dividend is being paid. Both total assets and net worth of the company are reduced when cash dividend is distributed. And there is a very famous person who is named by Hastings. So he once mentioned that the market price of the share drops by the amount of cash dividend distributed. That is why predominantly if you regularly watch out the stock market, you can simply see that whenever the company distributes the dividend, the market price of that particular share of the company actually dips a bit. So it drops to a certain level. In case of stock dividend, if the company, it is basically the distribution of shares in lieu of the cash dividend to existing shareholders. Shares are distributed proportionately, thereby retaining the proportionate ownership of the company. So if in case the shareholder owns 100 shares at any of the point of time, when 10% dividend is declared, he will have 10 additional shares, thereby increasing the equity share capital and reducing the reserve and surplus. The total net worth is not affected by the bonus issue. Simply. So there are major of the benefits, and if I'll talk about the disadvantages, so there are always pros and cons involved in each and every phase. Those will be the tax benefits, the amount of cash position that is going to get affected for the company, the amount of flotation cost that will be involved while paying off all those things. So it has to be taken care of in both the cases. There are some of the pros and cons. So these are primarily the two forms of dividend, cash dividend and stock dividend. I hope you got the entire clarity as to what these dividends basically mean and how they are actually being taken care of while company opts for any of the providing of any of them. So with that kind of hope and belief in you, perfect, I'll be concluding my video with a dose of motivation, and that will be patience, persistence and perspiration makes an unbeatable combination of success. Napoleon Hill mentioned this particular quote, so it's actually pretty well said time and again. Patience is the key for any kind of success. So patience, persistence and perspiration. It has to be a very unbeatable kind of a combination for any of the success which you are actually striving for in your life. So even if you have not got success in a particular kind of field wherein you wanted to, have patience. Keep your actions going on in a persistent manner and have that kind of good perspiration in you. Then that's going to be the absolute kind of an unbeatable combination wherein you'll be getting the success in a super manner. Perfect guys. Thank you. On behalf of the Edupedia world, keep interacting via questions, queries in the YouTube comment boxes. We love to hear from you and stay connected. That will help us in understanding your needs way better. Perfect guys. Take care. Bye. Good luck.